Risk high, reward high. Risk low, reward low. How do you estimate risk? Go with the risk reward ratio and the market's not buzzing and bubbling. You then end up being in a slightly risky situation. You can't just be, fine, I'll just buy and just hold. You've got to do more due diligence on every single property you want to buy. Let's talk about risk versus reward vis-a-vis the market situation. Now, generally speaking, you all know what I say about the market. All right, guys, welcome back. Look, if you're trying to buy a property in the Dubai market, there's a link below. Hit it, click it. Let's talk. Don't forget to hit the like, subscribe, and bell icon. Remember to show some love in the comment section, which means you can ask us a question and we'll answer it in the live sessions that we do every Saturday. We will take up your question and you answer it, okay? Guys, you got to remember, if risk is right here, okay, your reward's going to be also high. When the risk is lower, your reward's slightly lower, okay? I hope I'm trying to make sense of the whole situation for you, okay? Risk high, reward high. Risk low, reward low. Now, generally speaking, how do you estimate risk? One of the ways to estimate risk is how the market is performing at the current time. Now, here's the situation. Right after the pandemic, weird pandemic, November 2020, the market started rising. 2021, we had a bumper year. 2022, we had a bumper year. Now, you couldn't have been in the market at that time and actually predicted how the market's going. But generally speaking, when the market's very exuberant, very bubbly, things are going like bumping up and up and up, what ends up happening is you could actually end up buying anything, even if it's not good value, and you would end up being okay with that property. You would be able to resell it, so on and so forth. Because the general risk, because of the market dynamics, are a little bit low. So you can go a little bit low on the way you're evaluating a property. You might even make a bad decision and still be okay. But when the market's a little bit uncertain, when the market's a little bit tired, when the market's a little bit non-exuberant, when it's a little bit less bubbly, when you pour some fizzy drinks and, after about half an hour, the fizz is kind of not still there. And that situation, when the market's a little bit slower, if you can feel it, if you can put your ears to the ground, in those situations, the risk gets a little bit higher. So your evaluation of a property needs to be higher. You've got to look at a property, not just from one angle, then maybe about 20 different angles, right? So you look at developer, infrastructure, replacement cost, how much would you be able to resell it? What's the current rent that you're getting in similar properties around it? What's the timeline to delivery? What is the potential timeline for delays, right? What's the amenities in the building? What's the amenities in the area? What's the exit, the infrastructure, the quality, the construction, etc., etc., etc. All of this, you're going to have to start looking at to be able to understand and say, look, this is a good decision. Regardless of market conditions, it's a good value add property. Because if you go with the risk reward ratio and the market's not buzzing and bubbling, you then end up being in a slightly risky situation and you might end up hurting yourself. So high risk, high reward, low risk, low reward. But then the market, and I always say, look, fine, if the market is what it is and you can't understand it, fine, just be in the market long term. But when the market's a little bit tired, when the market's a little bit uncertain, and I'm not saying that's how the Dubai market is right now, but you've got to understand that. Speak to experts, put your ear to the ground and understand how the market's performing, right? When the market's a little bit challenging, at that time, your risk goes up. And then your valuation of a property has to be more thorough, has to be more you've got to do more due diligence and you've got to go down into it a little bit more. You can't just be, fine, I'll just buy and just hold. You've got to do more due diligence on every single property you want to buy. If you're looking to purchase a property, there's a link below. Hit it, click it. Let's talk. Remember to hit the like, subscribe, and bell icon. Show some love in the comment section. Ciao for now. Hey guys, thank you for watching the video. I hope you liked it. My name is Fahd Dawood. I've been doing this for 15 plus years. I started in Toronto, Canada in 2006, and since 2007, I've been based in Dubai and doing real estate in Dubai. Look, if you're looking to work with me, there's a form below and my mobile number. I do paid consulting. You can also get help from my team for services. If you like the video, press the like button, press the subscribe and the bell icon, and share it with your friends who you feel would be able to benefit from the content of this video. Last but not the least, I'll repeat, me and my team's role is always going to be to help and select the best property for you. Your role will be to invest in that property, and we will in turn invest in your life and your future. Bye for now.